Now, let us do example 4 of tangible assets, where it involves the disposal of an asset. Now, for a disposal of an asset, you need to pay attention as to when that asset was sold and for how long did we use it in the current financial year. It says that balances as per the trial balance on the 31st of December 2023. Vehicles cost is 1,300,000. Accumulated depreciation on vehicles is 780,000. Please note that accumulated depreciation will always be an opening balance, especially when you are given a pre-adjustment trial balance. That will be an opening balance. However, when it comes to the cost of the asset, we are not sure that 1.3, is it the opening balance or is it a closing balance? But considering that we are given the trial balance on the 31st of December 2023, you always conclude that the cost price is the closing balance, unless the adjustment tells you otherwise. Now, it says additional information on the 30th of June 2023, a vehicle with the cost price of 650,000 was sold at its carrying value. Now, that is key, and I will stop right there. I will simply draw my timeline, the beginning of the financial year up to the end of the financial year, okay? And put that important date there, which is the beginning of the year will be the 1st of January and the end of the year will be the 31st of December 2023. So we sold the vehicle on the 30th of June, okay? But we are not sure whether that 1.3 is opening balance or closing balance. So I need to read further. Then it says that the accumulated depreciation on the vehicle at the beginning of the year was 390,000, which is good. Okay? So this is only the accumulated depreciation of the vehicle sold at the beginning of the year, and we need that. And then it says this was not recorded. That's all we needed to know. Now, the fact that it was not recorded, it means that 1.3 is not the closing value. However, it is the opening value. If that sentence was not there, that 1.3 was going to be the closing value. Okay, so 1.3 is the opening balance. And on the 30th of June, we sold a vehicle and the cost price of this vehicle was 650,000. So when you take 1.3 and minus the 650,000, it'll give you the value of your vehicles at the end of the financial year. So which is coincidentally 650,000 as well. Now you can record this in your vehicles account. When you record it in your vehicles account, you will write the balance brought down on the debit side and then reduce this balance brought down by, well, you can increase it by the cost of vehicle that was purchased. But in this example, there was no vehicle purchased, and then you reduce it at cost price by the cost of the vehicle that was sold, and that will be 650,000. From there, you can balance this off and find your carry down, which is 650,000. That will be the cost price of vehicles that we still have remaining. Good. Now, I'm going to step into the calculation of depreciation. Again, the timeline is key here. Now, the beginning of the year is the 1st of January 2023. We sold one vehicle on the 30th of June 2023, which is the middle of the financial year. I don't know why I put it there. Now, you need to check the accumulated depreciation before you can calculate depreciation. Now, when we calculate depreciation on vehicles, please note this. There is a vehicle that was sold. That vehicle was not used for the entire year. and we have vehicles that were not sold. Those vehicles were used for the entire year. For the sake of calculating depreciation, you need to split the calculation of your depreciation. Now, you are going to split it by calculating the depreciation of the assets sold in the current year, and then later on calculate the depreciation of the remaining assets. Now, for us to be able to do that, I also need to split the accumulated depreciation at the beginning of the year. In this example, we were lucky to be given accumulated depreciation of the assets sold at the beginning of the financial year. So I'm going to take my total accumulated depreciation at the beginning of the financial year, which was the 780,000, and then subtract accumulated depreciation of the assets sold at the beginning of the year. And that will give me accumulated depreciation of the remaining assets. Now I'm splitting them between the assets sold as well as the remaining vehicles. Okay, I have already split the cost. Okay, we've got the cost of the remaining and the cost of the sold, which was 650. The remaining will also be 650. Now we've got accumulated depreciation of the remaining. We also have accumulated depreciation of the sold. I'm going to start with the depreciation, calculation of depreciation of the assets sold. I will start with the cost of the asset sold, which was 650,000, and then subtract accumulated depreciation of the assets sold at the beginning of the year, and that will be 390,000. This will give me the carrying value of the vehicles sold at the beginning. Remember, everything I'm doing now is at the beginning of the year, which is the 1st of January 2023. So at the beginning of the year, the carrying value of the vehicle sold will be 260,000. And then I will stop here. I need to calculate current year depreciation of the assets sold. But before I can do that, I first need to check the method of depreciation. What is the method of depreciation? We are depreciating vehicles at 20% on cost. Now, someone might say, but then if you're calculating depreciation, using the cost method, why do you need to calculate carrying value at the beginning of the year? Please note, I need to calculate carrying value at the beginning of the year to ensure that the current year depreciation does not exceed carrying value of that asset at the beginning of the year. If it does, then current year depreciation will be limited to the carrying value at the beginning of the year minus 1. You got that? All right. Now, important question. For how long did we use this vehicle in the current year? It's January, February, March, April, May, June. So I've used this vehicle for 6 months. I include June because it was only sold at the end of June. So when I calculate the depreciation on this vehicle, I will take the 650 times it by the depreciation rate of 20%, times it by 6 over 12. That'll give me 65,000 rand. And that is the current year depreciation. Now, at the date of sale, accumulated depreciation will have increased. Remember, the only thing that increases accumulated depreciation is depreciation. Accumulated depreciation of the assets sold at the beginning of the year was 390,000, but we depreciated this vehicle for 6 months, so that 390,000 must increase by 65,000 rand, which will take it to 455,000 rand. That is the accumulated depreciation of the vehicle sold at the date of sale, which is the 30th of June 2023. Now, the 65,000, I'm going to record it on the credit side of my accumulated depreciation account because it increases accumulated depreciation account. If you have watched the previous videos, you will have noticed that accumulated depreciation account increases on the credit side, and that is because it reduces the value of your asset. That's why we credit it. That's why it increases on the credit side, and it increases by depreciation. However, here, our accumulated depreciation account will actually decrease by the accumulated depreciation of the asset sold, which is that 455,000. That is because the asset is gone. We don't have that asset anymore. And the fact that we don't have that asset anymore, its accumulated depreciation must also go. How do I record this in my accumulated depreciation account? Now, in my accumulated depreciation account, I already have the balance brought down at the beginning of the year, which was 780,000. I'm going to increase it by 65,000 and then reduce it by the accumulated depreciation of the asset sold. That's why I'm going to write asset disposal, and the amount for that will be 455,000. This is only for the asset sold. So we add in that depreciation for the current year and then we take it out again. All right. Know that the 780 has the 390 and then we added the 65. So that 390 increased to 445. And now we're taking that 445 out. So accumulated depreciation of the asset sold, all of it is gone. It is out. We've taken it out. So now whatever accumulated depreciation we will have left will be the accumulated depreciation of the remaining assets. On that note, let us calculate depreciation for the current year of the remaining assets. As I've said it earlier on, you have to split the accumulated depreciation. All right, you take the total accumulated depreciation, you split it between the accumulated depreciation of the assets sold and the accumulated depreciation of the remaining assets. And you will have noticed that for the remaining assets, we are left with a cost price of 650,000 and accumulated depreciation of the remaining assets will be 390,000. The carrying value of the remaining assets at the beginning of the year will be 260,000. When we depreciate vehicles for the current year, actually this is just the remaining vehicles, not the vehicles sold, but the remaining vehicles. When we depreciate the remaining vehicles for this year, we will depreciate it for the entire year. So you will take the 650 multiplied by 20%, and that'll give you 130,000. That is the depreciation of the remaining vehicles for the entire year, meaning that the remaining vehicle will have depreciation for the car for the current year being that 130,000, which we will record on the credit side of accumulated depreciation account. And that will increase the accumulated depreciation from 390,000 to 520,000. Let us record this in the accumulated depreciation account. You will increase your accumulated depreciation account on the credit side by that 130. Now we are done. Now you can start balancing this off. When you balance it off, accumulated depreciation of the remaining will be that 320,000. We will start with that, 520,000. We'll start with that 520,000 as the opening balance for our accumulated depreciation in the following financial year. Now, the last general ledger account we are going to prepare will be the asset disposals account. In this account, it never changes. So if you're selling vehicles on the debit side of this account, you put in vehicles at cost price, which was that 650. And then on the credit side, you'll put in, well, on the debit side, if you have a profit will result when you sold this vehicle at a price exceeding its carrying value at the date of sale. And I will show you how to calculate carrying value at the date of sales shortly. Now, here we don't know whether we made a profit or loss. So I'll just put 0 there. Actually, we know we didn't make any profit or loss because this asset, this vehicle was sold at carrying value. I am going to credit this account with accumulated depreciation of the asset sold as at the date of sale. The date of sale was the 30th of June, and accumulated depreciation on the 30th of June was 455. This is the accumulated depreciation of the asset sold. When you take 650 minus 455, 55, it will give you the carrying value of this asset. And the carrying value of this asset will be 195,000, which is the same as what we sold the asset for. It was specified that we sold this vehicle for at carrying value. And the fact that we are selling it at carrying value, it means that We did not make any profit nor incur any loss by selling this asset. Here it is given to you. It was sold at its carrying value. All right, at its carrying value. Carrying value is selling price minus selling price minus carrying value. So basically, not actually, what am I saying? Carrying value is cost minus accumulated depreciation. And when you want to calculate profit, it will be the selling price minus the carrying value. I hope you got that. Okay. So in this example here, we did not make any profit nor incur any loss from the sale of this vehicle. Now, to record this in the general journal, I didn't record everything. I will simply debit asset disposal. Someone asked me, what is asset disposal? Asset disposal is neither a profit or loss account. It's not a financial position account. It only is a cost calculation account that enables us to determine whether we made a profit or a loss from the sale of the asset. So what we normally do is that when we sell an asset, we take the cost price of the asset from the account of that asset, and then we put it into the debit side of your asset disposal. So we create vehicles, we debit asset disposals, and then afterwards, you take the accumulated depreciation of that asset. Normally, accumulated depreciation will increase on the credit side, but here we will debit it and credit asset disposal. So you're also taking it to your asset disposal account. It's just a cost account. Now, when I calculate depreciation, I debited depreciation. I've explained why I debit depreciation. It's because it is simply an expense. But your depreciation here will be 65,000 of the assets sold plus the 130,000 of the remaining assets. So our total depreciation for the current year just on vehicles will be 195, which is made up of 65,000 of the assets sold plus 130,000 of the remaining assets. And that's why we will get 195 as our accumulated depreciation will be credited because it goes up on the credit side. Now, after increasing our accumulated depreciation, we are going to reduce it by the accumulated depreciation of the asset sold. So we reduce it on the debit side, which is 455. And we take this to the credit side of the asset disposal account. I've just shown you now. Now, when you take the cost, which is 650, and you minus that 455,000, you will get what we call the carrying value. Now, to determine the profit or loss from the sale of this asset, you will take the selling price of this asset minus its carrying value, which in this case, they're pretty much the same. It's 195 minus 195. So if we made a loss, we were going to debit loss because it's an expense and credit asset disposals. If we made a profit, we debit asset disposals and credit profit on sale of that asset. But here we didn't make any profit or incur any loss. Let us go to the tangible asset note. In the tangible asset note, you will start with the cost at the beginning of the year of the vehicles, which was 1,300,000, and then minus 780, which is the accumulated depreciation of all vehicles at the beginning of the year. And that will give you the carrying value of all vehicles at the beginning of the year, amounting to 520. Additions at cost is zero because we did not sell any vehicle. When we calculate our depreciation, it will be the 65,000 of the assets sold plus 130,000 of the remaining assets, and that will give us 195. But we sold an asset, so when we record it here, we will record it as a disposal. Please note that when you record your depreciation, you put it in brackets because it reduces the value of your asset. It reduces the carrying value at the beginning of the year. Guys, this is key. Make sure you understand this now because it's very useful when you do asset disposals in grade 11 or when you do it in grade 12, and it's also very important when we calculate the purchase and the sale of tangible assets. when we calculate our cash flow statement, when we prepare our cash flow statement. So this is key to understand. It is key to understand this. All right. When we calculate disposals at carrying value, you will take the cost of the asset sold, which is 650, and minus the accumulated depreciation of the asset sold, which is 455. That carrying value, you are going to subtract it from your assets. So you put it in brackets. So my net movements will be 195 minus negative 195 minus 195, which will give me negative 390,000. When you take that 520 at the beginning of the year and you minus that 390,000, it should give you the carrying value at the end of the year, but we'll get that. Now, at the end of the year, our cost has changed. It is no longer the same as the beginning of the year. At the beginning of the year, it was 1,300,000, but we actually sold a vehicle for which the cost price was 650. So you're gonna take the total cost price, which is 1,300,000 minus the 650. And then you can add the cost price of the asset you bought, but we didn't buy any vehicle here. And that'll give us, our cost has now decreased to 650. It has decreased because one of the assets has been sold. Same with accumulated depreciation. At the beginning of the year, it was 780. You are going to take that 780 added with current year depreciation of 195 and minus accumulated depreciation of the asset sold, which is 455. So here what you normally do is take this. Accumulated depreciation is only increased by depreciation, but it will decrease by the accumulated depreciation of the asset sold. And that will give you accumulated depreciation at the end of the year of 520,000. Now, take the cost at the end of the year of 650,000 minus 520,000, and that'll give you carrying value at the end of the year, which is 130,000. Now, that 130,000, we normally will take it to the statement of financial position under non-current assets, and you'll put it there as tangible assets at carrying value. So you will simply put it here, all right? Okay, that's it. That is it, okay? I just want you to also notice something here. To find carrying value at the end of the year, you will just take carrying value at the beginning of the year, add your movements. Here, I'm going to add a negative 390, and it'll give you that 190 or 130. So that's how you can check if everything is correct. As I've said, at 130, we are going to take it to tangible assets in the statement of financial position as at the 28th of December. Is it December or February here? It's supposed to say December. December 2023. All right. It is now your turn to practice and see if you understood what I've just done. Please try this out. And check under the comments section. I will attach a link to Google Classroom where you can find the handout to this and you complete that handout as we go, all right? And you will record it in the ledger account and the general journal and prepare your tangible asset note, okay? Now, once you have understood this, I just want to show you where we are at this point. It'll enable you to actually answer certain questions from past papers. This is this year's GDE, June exam, all right? And well, DBE, did I say GDE? DBE, I just want you to check this. So you're given equipment and vehicles there. You'll notice that for vehicles for this year, you do not have the cost price. You also don't have the accumulated depreciation. For equipment, you have cost price for last year and cost price for this year. And you will notice that we should have bought equipment. I don't know if we sold any, but I definitely know that we bought equipment because the cost price of equipment has gone up. And look at this. They say to you a vehicle was sold on the 30th of November 2022. The amount received was recorded, but no further entries were made. Details of the vehicle sold. So the carrying value, which is the beginning of the financial year, on the 1st of March 2022, yes, which is the beginning of the financial year, was 104,000, and we depreciate vehicles at 20%. So the fact that it was sold on the 30th of November, so we have used this vehicle from March, April, May, June, July, August, September, October, November. That is 9 months. And we depreciated on diminishing balance method. And the fact that we depreciated on diminishing balance method, it simply means that we will take that it was already calculated for us, 104,000, and multiply it by 20% and multiply it by, I said it's 9, right? Let me count again. It's March, April, May, June, July, August, September, October, November. Yes, it's 9 months. So it's 9 divided by 12. So current year depreciation of this vehicle that was sold will be 15,600. And then for the remaining vehicles, you will just have to find the accumulated depreciation of the vehicles at the end of the year. You have it at the beginning of the year, so you really don't need it at the end of the year. So all I'm going to do is, do I have the cost of the vehicle that was sold? Or they told me for how much it was sold for, but they didn't give me the cost, so I have to figure out what the cost is. Oh, they gave me, so this is just the cash that was received. So they're not telling me if it's a profit or if it is a loss, and they didn't specify whether we made a profit or a loss on this vehicle. So it's impossible for me to calculate accumulated depreciation of the remaining vehicles because I don't have the cost of the sold vehicle. And well, for accumulated depreciation purposes, I can easily calculate accumulated depreciation of the remaining vehicles at the beginning of the year. But it's just, oh, here it is. They gave us depreciation on the remaining vehicles, so we don't even need to calculate it. So current year depreciation will be, oh, I thought you guys can see this. Anyway, this is what I've been talking about. Apologies, I thought you could see this, okay? I realized that I haven't shared it. So basically, this is the paper that I was talking about all this time, okay? This is what we've got. I spoke about everything there. And this is the vehicle that was sold. Okay, so this question you should be able to answer it. As I've said, is this year's paper. We will discuss this paper when I go through it. I will definitely make a video on this. And it's just for me to show you how far we are. So we are right at the end. By now, you should be able to answer any depreciation or asset disposal question. For equipment, guys, it's quite easy. We discussed equipment. It's quite easy. It's really, really easy. It's example 1 up to example 3. Check them out. For example 4, you should be able to answer any disposal question. And just to show you that I haven't done this paper yet. I actually downloaded it today, but I'm just going to show you the memo of what we've been. So we know the current year depreciation on this vehicle that was sold should be that much, which is 15,600. I'm just going to show you a memo. So if for you to be able to check if What we are doing here, is it really legit? Is it really, really enough to prepare you to answer a past question paper or even a question paper in the future? And you see, this is what we were talking about. I got this as current year depreciation. You see it? And once you get the current year depreciation, you have carrying value at the beginning of the year. So carrying value at the beginning of the year will decrease by current year depreciation. So at the date of sale, carrying value will be 104 minus that 15,600, resulting in you making a profit of 3,100. Isn't that amazing? And depreciation for the year, I did specify it will be that 145 that was given to you plus this 15,600. And we calculated this 15,600 over there. Well, actually, it's not even there. So basically, this is, yes, there it is, there it is, there it is. They calculated it over there. And I just showed you everything in the calculator. And this is what you can be able to answer right now if you understood everything that was in the video that we just did right now. And if you are in the IEB, it should be enough to enable you to answer this question here, which is, I'll choose this year's paper for IEB as well. So it should enable you to answer, I think it was 1C, okay, IEB 1C, which is this one here. It relates to tangible assets. So here you have to be careful. You calculate depreciation of the asset sold, you calculate depreciation of the new asset, and then you calculate depreciation of the remaining asset sold, new asset, and remaining. Okay. And you should be able to answer this question. I have made a video on this. Just check under accounting IEB 2023. It is right there. So you can just take a look at this video. It's just me teaching you towards your grade 12 exam. By now, you should be able to answer any question that relates to tangible assets. Okay. Thank you for watching. And I really appreciate it. Please don't forget to subscribe, like, and hit that notification button. More videos to follow. Awesome.